Yeah. Surprise, a little different than you used to. Yeah. Dropping these bars on YouTube, knowledge I introduce you. Yeah. We chasing this money like it's the prize, it's the voodoo. Fugazi, fugazi, it's just a lie we buying into. We need some cars on deck. Get the rollies, get the Moe, all the Mars on deck.
All right, good evening, everyone. You've got me at a slightly different angle today. I alluded that I was going to do this yesterday, so we're going to dive into this today because this isn't new news. This is old news, but I wanted to raise the question. There is a question in the chat, a poll in the chat. Please respond to it. I'm asking you, would you trust a bank over a private landlord as a tenant? Because as it turns out, Lloyds Banking Group, who are the biggest mortgage lenders in this country at this point in time, in 2021 said that they are going to move into the rental market here in the UK. The goal was to get 10,000 properties in the first year, but they were looking to get up to 50,000 properties in the next 7 years, so by 2030. So this is something that is already underway, and I want to provide some commentary, and I want to kind of gauge what you guys are thinking here, because I think this has been painted out to be a negative move, and I don't necessarily think that it is. I think that banks are doing what banks do. And businesses are doing what businesses are doing based on the fact that they are data-driven businesses, and the data is telling them that this is the way to go. With that being said, though, there is one point of concern which I think we do need to talk about, and that is if the banks with all of the money were to buy up 50,000 homes, which, when you consider the bigger scheme of things, isn't a lot of homes, does it deprive people from getting on the property ladder? It's already a pretty tall order anyway, but does it make it any worse? I guess that's the question. And I genuinely want to know what you think watching this. So please do let me know in the chat or in the comments if you're watching this on replay here on YouTube. But let me just jump straight in very quickly to the announcement that Lloyds themselves actually put out in 2021. So this is what we're discussing right here. Lloyds enter the rental market. Now, this is off their own website. It says Lloyds Banking Group moves into the private rental sector with the launch of Citra Living. This is the company that they set up for that. We'll go and have a look at their company accounts in a moment, by the way, but let's just have a look at what they're saying here. So it says here, as part of the Lloyds commitment to helping Britons recover and helping expand the availability of quality, affordable homes, the group is now looking to extend directly its support to the rental sector. One in 5 households in the UK rent privately, and demand is set to increase over the next 5 years as many traditional private landlords leave the market due to changes in regulation and tax. This will further affect the supply of rental property. So they're stating the problem right here. Now, there have been huge changes for landlords to the point that maybe it is a little bit not as profitable as it used to be when it comes to the things that they can actually claim back. And the tax regimes haven't been kind to landlords. There is no doubt along that. You also bring into the equation the fact that we've seen so many interest rate rises as of late, and that in itself squeezes landlords even more. So it makes the proposition of actually owning a property unattractive, to say the least. I was speaking to someone earlier today for the podcast, which will probably go out on Monday, and the question that he asked me, and I didn't know the answer to, was, what do you think the average profit for a landlord in the UK is per month? Per month, that is. And the answer that he gave me was £200 a month. And this was prior to interest rates going up. So there's been a huge change. And now what Lloyds are seeing here is that as landlords exit, there's potentially an opportunity for them to go in and actually mop up some of these properties so they come under ownership here. And I'm monitoring the poll here. If you've not voted just yet, please do vote. We're currently, I'm not surprised at this, but we'll come to that in a moment. So this is what they're planning to do. Now, it also says here in this article, and I haven't got my glasses on for this, so I might be squinting, so bear with me for a moment. It says here, Citra Life will initially start small with a focus on buying and renting good quality, newly built properties. The first development to complete will be Fletton Keys in Peterborough, where 45 apartments will be available to renters over the coming weeks. The aim will be to acquire around 400 properties by the end of the year and to double its target next year. So that was in 2022. So Sideshow Living was the holding company that they basically set up to go out through this venture. Now, Guardian actually reported on this as well in 2021. And this is what the Guardian actually had to say. It says here, let me just share this one right here. Make sure you get this tab. There we go. It says, it's already the UK's largest mortgage lender, and now Lloyds Banking Group aims to become one of the biggest private landlords with a target of buying 50,000 homes in the next 10 years. It says in the second section that I've highlighted is that Lloyds has made no secret of its aim earlier last month to announce its entry into the private rental market, becoming the first major high street bank to make such a move. And it says here also that Fletton Quays was the first development. Now, when you go and look at Fletton Quays, that was a development that was actually approved back in 2015. This is in 2021 that Lloyds got on board with this. So that I think the Peterborough Council had a little bit of issues with developers and so on and so forth. But interestingly, let's go and have a look at Sideshow Living, because I was on Companies House a little bit earlier on today, and it's very interesting some of the things that they've actually done so far. And I'm going to show you something in a moment. Now, one of the things that I did find out by going on Companies House is, and actually, let me just share this screen with you so you can actually see this right here. Sideshow Living is the company. Now, there are different companies that were set up by Lloyds to kind of cover this this project. Company number one is what we're looking at. Now, if you look here, as of August 2023, there is something called the registration of charge here. And we're going to take a look at this next, because they've obviously got Fletton Quays, which is in Peterborough right now, but they have also, it seems, agreed a development in Edinburgh, effectively. So there are 3 areas of ground at Southport Street, Edinburgh. And it's really, really interesting, because when you read through this, and by the way, this is all publicly available, by the way, you can go on Companies House and go and actually look at this right now. It gives you a little bit more information. And actually, when you go all the way down here, you can actually have a look at what the development is actually going to look like. You've got some visual plans here as well. And it looks like it's going to be done in conjunction with Barratt Homes specifically. So this is another sort of area where they're looking to basically stake their claim in the private rental market over in Edinburgh. And this is the only one that I've been able to kind of see. Now, they've got, I think it was 2 companies or 3 companies under this project. So I think what they might have done is they set up one company for each project that they're going through. But this is the one that we found under them. But more interestingly, I actually had a look at their accounts. Now, I mentioned on the live yesterday that one of the things that I was interested to see was, let me just come full screen really quickly. These accounts only account for 2021, 2022. What we don't see yet are the 2022 accounts to see what they've actually invested money in, where the appreciation on the balance sheet is for them. But if we have a look at this very quickly, this actually gives us a lot of information here. So it says the company, obviously a loss in the first year. There was a loss before tax for the financial period, and the loss was 2.597 million. The loss in the period is primarily due to fair value loss on the investment properties of 789,000 and operating expenses of about 1.856 million. But it says here the balance sheet shows a total asset position of 29.9 million pounds. Investment property valuation of that is 16.609 million. So they've clearly thrown quite a lot of money at this, but we don't yet know what else has actually been put into the accounts and what will show in the accounts when they actually bring in the 2022. Now, I would imagine that whatever money has been allocated to new developments will be shown in the 2022/2023, which we won't see for some time now. But this will give us an indication of how far they are in their plan to acquire 50,000 UK homes for rental purposes. So in the bigger question that we need to ask here, and I want to bring this into the context of what we're seeing right now, because this is quite important. We're seeing interest rates rise, and obviously they are a big mortgage lender. They're the biggest mortgage lender in the country, right? But alongside that, we're also seeing property prices fall, which they are going to have an abundance of data about. They're going to know exactly where property prices are falling. They're going to have an idea and a clear indication of where they think property prices are going to go. And what they're doing is they're developing and buying new homes. And some people may feel a little uneasy about this because they may say, well, they're using the information that they have potentially for their own gain. And I don't know any industry where you wouldn't do that. You talk about trading, stockbrokers, they all do exactly the same thing. It's the same thing in the investment game. You have access to the data that informs your decisions. But the bigger question here is this, and this is what I really want to know from you guys. Do you think this is good? Because at the moment, one of the things that we have is an issue in supply versus demand of homes here in the UK. If you live within the M25, it almost feels insurmountable to become a property owner currently as it is. The prices are absolutely ridiculous. And even with property prices falling, interest rates increasing means that your situation isn't any better. And I've spoken before on this on the channel about how far property prices would need to fall in order for the interest rate rise and property prices to bring us back to where we were before, when interest rates were low and property prices were high. And it feels as though that equilibrium is going to be almost impossible to match. So is it a good thing for a bank, and they are the first so far? We don't know what Barclays or any of the other ones are actually doing. I'm sure they will catch wind of this and want to be involved. What happens when maybe 3 other banks, 4 other banks all come into the private rental market, buy up, say, 1 million homes? What does that do, number one, for the supply of homes? And what does that do to rents? What does that do to people's aspiration trying to get on the property ladder? I think there are some positives here in the fact that, and let me have a look at the poll right here. So at the moment, the majority of you are saying, actually, let me just end it right here, because it'll be interesting to hear what you guys are thinking. So a lot of you, 53% of you, say no, that you would not trust a bank over a private landlord as a tenant. 46% of you are saying that you would. And here's my take. I think that one of the issues that has been labeled at private landlords is that some of them do keep their properties in a poor state of repair. I don't think you're going to have that with banks. I think banks will keep their properties in a great state of repair. They will do what is necessary to protect their investment, and they have cash liquidity to be able to do that, and it will be properly managed. I think that is an upside. What I think is a downside, though, is if you do have banks building homes, are they going to be affordable homes? If you have banks building homes, there is obviously going to be a commercial corporate profitability equation in this. Does that then run the risk of pushing property prices even further because it is owned by a bank? I don't know. And I guess we're going to have to see what happens from here on out. But I'd love to know what you guys think, either in the chat or in the comments. But I just wanted to talk very, very briefly about this, because this is something that I guess is happening right now and may become much more of a conversation, certainly over the next 7 years as we run into 2030. I mean, I don't know of any other banks that are doing this right now, but I'm sure if it gets to the point where Lloyds are making tons of money hand over fist, there's one thing that you can guarantee: other banks are definitely going to follow suit. So what does this say for the future of home ownership in this country if the landlord really is the bank? Let me hear what you guys are saying in the chat really quickly, because I know that there are some comments that are coming through here right now. So someone's saying here, where are they buying? So developments that we've seen so far, according to the reports, were Peterborough, and we've just seen one in Edinburgh, but we don't know any others just yet. Not that I've been able to find on the internet, and I'm sure that there will be others. The unfortunate thing is we don't have accounts for 2022 just yet, because that may have given us some indication of where these developments are, but we don't currently see any. But we know that there are 2 at this moment. Nikki B, welcome. Thanks for joining. Collaborative is just saying here, look over at the States where funds like BlackRock did this right after the 2008 financial crash. It's caused a massive asset bubble and priced people out of buying their homes. And that's one of the concerns right here. I mean, there were a lot of companies that did that in the States in 2007, 2008. And you're right. It has created a property bubble. Will the same thing happen here? I mean, the fear is you can't compete with the banks that have that kind of money available. And as landlords are starting to sell, whether they're focusing on new builds or whether they're looking at desirable areas where they'll buy existing stock, we don't know. I would imagine they probably have a dual approach to this, right? But it's concerning because how are you going to compete with banks, right? And particularly when they have data on property prices are going to be falling, and maybe on their mortgage arm, if they have foreclosures where properties are being repossessed, they can simply just go buy those. I mean, how that will work legally, I don't really know at this point in time, but it is a concern for the reason that you've given right here. Peter, Lloyd's investment is housing small beer compared to the 5 billion. Yes, it is, mate. Absolutely, it is. And they're making lots of profits. And one of the things that you can rely on these banks to do is, they are very, very good at churning their money into future profits. And one of the things that I think will probably happen here is they will turn this into something like a real estate investment trust. And that will be really where they'll get additional value. So they'll get profits obviously from the rentals, but making that into an investment trust itself will garner more people to invest into it from a corporate point of view, and even from a private sector point of view, which means that they get to spoil that money, that initial seed money, into even more profit in the future. It is all just a game at the end of the day. It's already happening in the US. Big corporations are doing it. Yes. And you know what? This is where oftentimes something happens in the States. We often do exactly the same thing. And there's a lag, right? There's a lag behind. And it feels as though now this is where we're going to be heading here in the UK. Let's see what Nikki B, what were you saying here? Is it you've already said, I've already covered that one there. Luke, what are you saying? The concern is that their buying power skews the market to make ownership too expensive, thus forcing more people to rent. Absolutely. I agree with you on that one. The thing is, okay, so here's the question. Is there a way for the government to step in and legislate this? And this is where you get into the same argument of how do you get a business in a capitalistic society to act responsibly, because this is going to be the big thing that's going to, it's almost inevitable that it will happen. You cannot compete with banks that have that kind of capital. And when they have that kind of capital, essentially they control the market, right? And that's really where people get paranoid and concerned. It's all about control. So now you're beholden to the banks and you can't escape from under the banks because you need them for the roof that you have over your head. It's really concerning. And let's not make any qualms about this, right? The banks, if they want to increase rent, will have no qualms in increasing rent overnight, and they will find a way to do so. So there's also that concern as well, because they're a big corporation. And they will hide behind the fact that, wait, we have to satisfy our duties to our shareholders in the justification for it as well. Michael Williams, this will not affect housing prices. 50K will do nothing when we are missing 6 million homes. That's a good point. So we talk about how many homes across the the bigger picture. I mean, I think the number was from 10 years ago or something like that we needed to build like 300,000 homes a year, and we haven't even come anywhere close to that market. The concern here will be if other banks come in and they actually up their quotas and they start buying significant amount of homes. I don't think we're just there at this point. Michael's also saying here they're also adding some, but looking to take over small landlords and use scale to improve margins. What you're also saying here, but the big builders, they will maintain the supply demand for profit, for maximum profit. And there is, an argument to say that, if you look at developers like, Persimmons, David Wilson Homes, Barrett's, and some of the other ones that are out there, the big ones, right? Taylor Wimpey's. There is an argument to say, well, does the government step in and actually say, okay, in opposed to you building on developments across the country and making 15% of the homes that you build affordable homes, is there an argument for the government to mandate and say, look, you need to make sure that the affordable home proportion of any development is now 30 to 40%, because that's going to be one way in which you're able to make more affordable homes available to people who actually need them. But then you get into the question of profitability, capitalism. Will companies actually want to shave their margins to provide more affordable homes when there is no requirement for them to do so? So I think in this conversation, the government needs to have a bit of a backbone in dictating what has to happen moving forward. But I don't know. Look, the poll has said it all, I think. But let's just keep going through your comments right here. Michael's also making a really good point here, because they would have to adhere to the building standards. Michael's saying here that he sees it that the banks will be better for building quality, but rent will go up. Now, I think, will they be better though? I think, look, the standards are there, and I think they'll meet the standards. Will they exceed the standards? Unless they're incentivized to do so, I don't think they will. But one of the things that we know is a problem in this country is we already have a shortage in properties anyway. So the developers are, you build them, you sell them quickly, and you just go on to the next project, and that can often sometimes diminish the quality of the final finished product, right? Will the bank be better at that? I don't know. They're still going to have some commerciality behind them, surely, so it's hard to say. But I don't know, man. It's really, really difficult, because I even where I live right now is a new development. It was built, we were the first to move in here in 2016 or so, and we're okay. But there are developments on the opposite side of where we live where the building work is just an absolute shambles. Why? Because they're trying to get the build done as quickly as possible, sell it, move on. And I think that there is still the danger that even banks would fall into that remit, because at the end of the day, they want to build them, although they won't have to. If they're looking at a small quota, they may take additional time, and quality checks, maybe. I don't know. It will be interesting to see, really. I'm just scanning your comments here. Nima's just saying here that she disagrees with banks becoming owners of bigger portions of our lives. Yeah, I mean, there is always that argument as well. She's saying more control reduces competition. He's saying here simply they will own the price rises, and we can do nothing. There is potential. I mean, again, you've got to look at it from a wider point of view. How many homes are they owning? Out of the wider stock of homes, will a small proportion of ownership in a wider market, how much of an impact will that have on the wider market? We don't know. I think at small numbers, at small scales of 50,000 versus the number of properties that are in the country currently, yes, for that small group that they own, yes, they can have more control. But in the wider market, they probably won't have that much of an impact unless we see those quota numbers increase drastically, and then a ton of other banks now come into the market, so that in the end, maybe in 20, 25, 30 years time, most of the homes in the UK, or at least the rental properties in the UK, are owned by banks. That will be problematic. At this stage, is it going to be a problem? I don't know. Maybe, possibly. We'll have to wait and see. But it's almost like it's like daring fate, right? Wait and see what happens. Someone's just asking here, wonder why the banks have not done it before in the UK, or have they? I don't know whether they have historically. I wouldn't be surprised if they had, to be honest. I wouldn't be surprised if they had in previous years, but I didn't look into whether they had previously or not. I wouldn't be surprised if they did. Someone's just saying here that Lloyds talked about getting into... let's have a look. 1 second. Talked about getting into rentals years or so ago. I mean, this report here is from 2021, and they finally, kind of pressed the button on that as well. Really good conversation, guys. I was looking through the comments on everything here. look, I'd love to know what else you guys think. If you're watching this on replay, then please do leave a comment here. This isn't to kind of panic people, but I just found this really interesting as a topic, and I thought it would be worthwhile just having this as a conversation piece. Tonight, because I looked at it yesterday, and I was wondering. I don't necessarily like to paint these things out to be doom and gloom. Obviously, there are concerns and questions that need to be asked, obviously, and people might be worried. But I think when you have these conversations, there are always two sides of the coin. There will be areas and things that it will be good for. There will be things that it's going to be really, really bad for. The question is, do the cons outweigh the pros? Do the pros outweigh the cons? It's difficult to know for sure, and only time will tell. But I thought I'd raise this because it's a good conversation piece. I think it's quite topical right now with interest rates. I mean, look, next week we're going to know if there's going to be interest rate hike. We're going to see what happens to property afterwards, and it's a fascinating time right now. But if you did enjoy this video and you did get value from it, please remember to smash the like button. That will be amazing. It just helps the channel. It helps with other people getting to see this after the live has ended. The YouTube algorithm will basically just push it. There's been a lot of engagement here, which has also been helpful, because YouTube is a fickle thing. It will look at the engagement on a video and decide whether or not it was worthwhile or is worthwhile pushing to someone else. So taking that 1 second to do that is great. And if you are new to the channel, you found value from this, consider subscribing as well. It is Friday, so I'm sure that a lot of you have got interesting things to do this Friday evening. I'm going to literally clock off now. I need to record the last part of my podcast, because the guest that I've got for the podcast that we recorded this morning is so interesting, but we had some technical mishaps. So I've got to finish the podcast recording with him in about 10 minutes. That will go out in a couple of weeks. But whatever it is that you're doing this weekend, have an amazing time. I'll speak to you at some point next week where we'll be talking about interest rates and what the Bank of England is going to do. Cheers.
Yeah. Surprise, a little different than you used to. Yeah. Dropping these bars on YouTube, knowledge I introduce you. Yeah. We chasing this money like it's the prize, it's the voodoo. Fugazi, it's just a lie we buying into. We need some cars on deck. Get the rollies, get the Moe, all the Mars on deck. We got the traders, got the picture with the Bentley in Dubai. Are you dripping in designer, looking fly? On the bombardier, sipping on the wine. Broke man, we broke. Where's the fun in being broke? Stocks and bonds get you yo. That's what I'm teaching these folks. I see that smoke, see them choke. Getting coke. While I'm researching these stocks, buying coke. 20 months on the channel, million people taking note. I got a warrant for Buffalo.